Good morning, good afternoon, good evening, everybody, depending on where you're joining us from today. My name is Kavya, and I'd like to welcome you to Women in Risk Finance, our webinar, and the second edition of this, celebrating our champions in risk finance. While we're still waiting for our last few attendees to join in, we have a video for you.
This is our world. These are the schools that government funds helped build. These are the children that went to the schools that used up all the funds. These are more funds the government spent so more children could go to school, more desks could be bought, more villages could be helped. These are the storms that laughed at the funds, that washed out the schools that couldn't be rebuilt. This is the world without disaster risk financing. But with disaster risk financing, this is the world we can improve together today. These are the children whose lives we can help because we put aside funds for tomorrow. This is a world where planning ahead means moving ahead. A world with a better future, made better with disaster risk financing. This is the world we can build for her, for him, for them and them, for everyone, for everywhere, forever.
Thank you so much, and happy Women's Day to everybody who's joined us today. So we all know that women play a crucial role in disaster risk finance because they're often disproportionately affected by natural disasters and other crises. In many communities, especially ours, women are the primary caregivers and providers for their family, but they also have less access to resources and financial support, which makes them particularly vulnerable to the economic impacts of disasters, especially loss of income and property damage. So it's very important, especially today, that we already start thinking about how we can take the unique needs and perspectives into account to help us create more equitable and effective policies to address the diverse challenges that they face, especially in times of crisis and in times like this, when we have climate disasters come up very often. Ultimately, including women in disaster risk finance is not just about fairness and social justice, right? It's also a smart investment in building much more resilient communities. To speak a little more about this and why we invest in women in disaster risk finance, I'd like to invite Jean Pen, our Global Director for Finance in the Finance Competitive and Innovation Global Practice. Jean leads the World Bank's work to promote the development of sound, stable, sustainable, and inclusive financial systems. He leads a global team of experts who work with governments and partners to make financial systems more resilient, to open access to finance for the poor and vulnerable, to support economic activity, and to develop financial markets. This strategy and implementation, which Jean leads, emphasizes the development of digital financial services, addressing climate change and sustainable finance, and also importantly, creating opportunities for women by bolstering financial inclusion. So welcome, Jean, and please do open today's event for us.
Thank you very much, Kavya. Good morning, good afternoon, everybody. It's really a pleasure to join you in this Women in Risk Finance series, and particularly today on International Women's Day. So thank you very much. So a couple of words of introduction, and I very much look forward to hearing the various panelists who bring very, very interesting insight on disaster risk finance, but also why bringing the woman perspective is so important. And this is everybody's business. We all need to mobilize. So maybe a couple of, we'll have three messages. and a couple of facts and examples to illustrate and hopefully that really are setting the scene for today's event. So the first message is that vulnerability and exposure to disasters is influenced by gender. So that's why it makes it so important to consider gender when formulating plans for climate and disaster risk finance. So maybe a couple of facts to illustrate that. 80% of people displaced by climate change are women. Women are also overrepresented in vulnerable sectors such as agriculture and informal work. So when you look at the big picture, many of the world's poorest women work informally in subsistence agriculture, where they make up half of the workforce in a sector most impacted by climate change. And we also see that 2/3 of the female labor force in developing countries, and in particular more than 90% in many African countries, are engaged in agricultural work, which is particularly exposed to climate change. We also see that women are facing greater challenges in accessing resources and participating in decision-making processes related to climate change adaptation and mitigation. And in particular, they are disproportionately excluded from social protection schemes out of the 4 billion people unprotected globally. So for example, 26.3% of women-aged women are covered by a pension scheme compared with 38% with working-age men. Women are also less likely than men to successfully raise emergency money and more likely to rely on friends and family, which are less reliable sources. We also see a lower level of financial inclusion as women make up 55% of the world's unbanked adults, meaning that they have no access to financial services such as bank accounts or insurance. And finally, they face barrier in accessing information. For example, mobile phone can be a valuable asset to receive climate or shelter-related information, or even receive cash transfer or insurance payouts. But what we see is that in low and middle-income countries, women are on average 80% less likely than men to own a mobile phone and 20% less likely to use the internet on a mobile phone than men. So all these elements show that they are more exposed, they are more vulnerable, and they have less access to the responses when shocks hit or when disaster happen. So that's the second message, what to do about it. So that makes it even more important to address the gender dimension in policy formulation and project work. And it's not just a human rights issue, but as you said, Kavya, it's also smart economics. We have seen a lot of progress over the last decade, but a lot remains to be done. And disaster risk finance is probably one of the areas where we need to push the envelope and do even more. So just a couple of examples. Closing the gender gaps in the workforce could add 20 billion, 26% to global GDP by 2025. Improving gender equality could lead to an additional 10.5 million jobs in 2050. So investing in women's economic inclusion and empowerment can decrease poverty across generations because women are more likely to invest their income in their children's health, nutrition, and education. At the bank, we have made significant progress in addressing gender gaps in our operations since our 2016 gender strategy, which is actually being updated at the moment. One example, the number of projects, the percentage of projects certified as including analysis-based action to reduce gender gaps and discrepancies increased from 50% in FY17 to 92% by the end of 2022. But as I said earlier, opportunities and gaps still exist, and disaster risk finance is really one area where the potential to systematically include a gender dimension holds tremendous promises in order to protect and enhance women's economic participation. What we need is to engage women in climate risk finance to bring new perspective and insight that can enhance the effectiveness and sustainability of climate resilience and finance initiative. And this is, everybody is very mobilized on that at the moment. So this is also time for action. And what we think is that including a gender perspective in climate risk planning can also help ensure that policies and programs are really responsive and customized to the diverse needs of men and women and can help promote gender equality and social inclusion. So what we want to do is a call for action, saying that investing in climate and disaster risk finance is crucial for countries to protect all of their citizens from the devastating impact of disasters. And the video we just saw should really illustrate why this is so important. We really need to start thinking how to more systematically include gender consideration in disaster risk policies. So a couple of points. Gender inequalities, as we discussed, can result in gender differentiated disaster impact. And then you have a vicious circle because differentiated impact influence gender dynamics, and then that affects the future resilience to shock. So as countries develop their disaster risk finance strategies, we really encourage them to look towards the future and start thinking on how to systematically include gender consideration and bring enhanced gender representation in policymaking. The objective is to help countries prepare for emergencies, respond quickly and effectively when they occur, and then recover faster, so that the impact of disaster on citizens and the economy is reduced. So we really recommend and we will continue to support including women in decision-making processes, having them at the forefront of disaster risk finance policy making as a really important step towards getting a better understanding of women's need, shape the policies and responses accordingly, and improve service design and delivery for female. And I think our panelists will be the best place to illustrate how to do that, how they've been able to achieve that in their countries, and hopefully provide very insightful examples and benchmark on how others could do that. So thank you very much for the invitation. Kavya, back to you, and I very much look forward to the lightning talks by our colleagues and learning out of it. Thank you very much.
Thank you, Jean, and thank you for setting the scene up and for that very inspiring call to action which you made, and just taking up from that call to action. As we celebrate International Women's Day today, I am so honored to have the opportunity to host 4 remarkable women leaders who made this impact in the critical area of disaster risk finance in their countries. And their journeys have personally been a huge inspiration and motivation for me. And I also know countless young women around the world and in their own countries who look up to them. So without keeping our audience waiting much longer, I'd really like to invite our first speaker, Deputy Minister Eka Gonçalves, who is the Deputy Minister of Finance at Georgia and is in charge of public debt and relations with institutional donors and partners. She works alongside her peers and colleagues and has really helped advance disaster risk financing in Georgia through budget practices and most recently through the government's commitment under several development policy operations in collaboration with the World Bank Group. So Eka, over to you. And once again, thank you for making the time to join us today.
Thank you. Thank you so much for your introduction. Good morning, good afternoon, good evening, based on wherever you are joining today. I'm really honored to be here and participating in this seminar and have the opportunity of sharing the Georgia's experience. Gender equality, social inclusion are really very cross-cutting issues which need to be one of the pillars of any policy decision-making and any policy formulation, including the topic of today's discussion. Risk financing, but I'm pretty much sure that addressing those issues really needs engagement of all genders and of all people, professionals in the field to have the quality results achieved. But anyways, let me also congratulate everyone the International Women's Day and wish every woman on this planet to proudly stand by their rights, by their principles, and by their wishes. If you can move to the next slide, please. I'll briefly share the experience, how Georgia started to address its fiscal risks, including the ones related to the disasters. For that, I really want to mention that we were lucky to have a good engagement from international organizations such as World Bank, International Monetary Fund, and other IFIs who work very closely with us to streamline our public finance management reform in general and particularly fiscal risks area in this regard. So as we all know, natural disasters are implicit contingent liabilities, and with the global warming happening, the frequency and the scale and the scope of those disasters happening is expected to be larger and higher. Georgia might not be the country who is particularly affected with the large-scale disasters, but of course, this is still something that makes us alert and makes us very keen to be closely monitoring and planning ahead for the possible outcomes of the upcoming possible disasters, especially, for example, the very recent earthquake in the neighboring Turkey really made people look closely how many aspects of our everyday life are managed, whether we are ready for the disasters like or similar of this, and how our policies are streamlined to be proactive, preventing or then having all the means available to address and to mitigate the results of this kind of disasters happening in the country. Georgia has been mostly affected by disasters like floods and earthquakes. The 2015 flood in the capital city was the largest one happening for the past decade, and it took the loss of physical assets of worth of 50 million Georgian lari and 10 million JAL financial losses. So that was kind of the largest amount in recent history. And except of that one, the other disasters happening, for example, from the past decade, we are the ones where the government on the rule-based approach has spent on average 0.06% of total expenditure. The largest earthquake for the past decade happened, for the past 2 decades happened in 2002, again in Tbilisi city, and we had earlier in 90s, a bigger one in west part of Georgia, and the estimation of the fiscal cost of that earthquake was around 700 million Georgian laris. If you could please move to the next slide. So as I mentioned, as part of the public finance management reform, we started disclosing fiscal risks of the country. And at a later stage, we started to include the natural disasters as part of the fiscal risk disclosure in our practices. So at this point, the government identifies and discloses the main fiscal risks from natural disasters, and it's quantifying them based on the historical experience. But there are also a lot of challenges regarding the data from the historical experiences, how reliable they are, and how we can streamline and make the projections and analysis based on them more accurate and more valuable for the future, and how we will be managing, how to come up with a strategy to manage this kind of occurrences in the future. The accidents probability curve from earthquakes modeling for Georgia, for example, showed that losses increases with the return periods, and once in a century earthquake for Georgia would bring 25 times larger losses than, for example, once in a decade type of earthquake. As for the floods, for example, based on the analysis, the once in a century flood would result in losses of 2.2 times more than the floods of the once in a decade occurrence. So the government has been managing that so far through contingency funding, but again, streamlining the forecasting and managing the strategy for the better management in the future really needs more accurate data collection to have a better ready-made policies in case of these kind of emergencies arise. Next slide, please. As I mentioned, natural disasters is one of the aspects of our fiscal risk statement we've been disclosing for the past several years. We started disclosing the fiscal risk statements with the fiscal risks coming from macroeconomic macroeconomic conditions of the country and of the region and globally, and then added step-by-step disasters, risks coming from different areas, like, for example, the management of state-owned enterprises, PPP liabilities, mostly in our case, that's the energy sector PPAs. Pandemic, for example, I guess 2-3 years ago, earlier than 3 years ago, people might find a little bit ridiculous having an exposure to a pandemic, but for today, it's really a very vivid picture how pandemic can be affecting our macro fiscal stability and how it is important to be managing the risks arising from this area. And of course, climate change and natural disasters are the latest addition to our fiscal risk statements, on which we've been working very closely together with the World Bank team and with the IMF team, and we are very grateful for that support. Now we've been receiving to streamline this process further. If you may go to the next slide. As I mentioned, so far the government has been managing the fiscal risks coming from disasters through its contingency funding, except the disasters like the flood of 2015. We are always able to manage and mitigate disaster consequences through our contingency funds, which we accumulate every year in our national state budget. Together with the Fund for Regional Development, which also always has an allocation for contingency funding for mitigating the consequences of floods and other disasters happening more or less regularly, minor scale ones, but pretty significant for the municipalities, for example. And there are also specific areas where more proactive approaches have been introduced, like agricultural insurance, for example, for the farmers and crop growers, but these are still very preliminary steps of proactive instruments to be included in our management of fiscal risks. As I mentioned, the data collection is one of the key areas where we will be investing in the future, since accurate data is very significant for accurate planning ahead. If you could please go to the next slide. So based on the challenges identified, which is related particularly to the data collection and then having instruments to analyze them, we are committed and we aim at preparing a strategic managerial approaches for the upcoming consequences of the risks and disasters which might be taking place in Georgia or in the region. And for that, we will be further streamlining our budget rules, and disaster risk management framework will be adopted. Formal procedures will be approved for the data flow. Information should also allow us to have more innovative financial solutions in specific sectors of particularly agriculture is very important, but it also could be related to other sectors, hospitality sector, for example, since tourism is one of the key drivers of our economy, and other areas to streamline with more systematic approaches. So I guess that's it very briefly, how we've managed and started to disclose our fiscal risks, including disaster-related risks. And I really hope that from several years from now, we'll be having a better, even better and even more sophisticated results to be disclosed, how we are managing the risks related to disasters. Thank you.
Thank you, Deputy Minister Eka, for that great presentation and for taking us through your journey on building this disaster risk strategy. I know we already have a lot of questions coming in, but we do have a Q&A session at the end. So the facilitators are watching the Q&A chat, and we will collate all of them and have time to ask our speakers those questions. Meanwhile, I'd like to invite our second speaker, Ibu-Nella, who is the head of the Regional and Bilateral Policy Center for the Fiscal Policy Agency in the Ministry of Finance in Indonesia. She has championed disaster risk financing agenda within Indonesia, but also within the ASEAN region. And she is leading the establishment of the largest DRF mechanism in the country, a pooling fund for the National Disaster Management Agency. The establishment of this fund and the seed capital for it is financed through World Bank support. She also represents Indonesia as the co-chair for the ASEAN +3 dialogue, where there's currently discussion on how to embed DRF as a core and permanent priority of ASEAN 3 and create a sustainable regional DRF mechanism. So lots of really, really great work in the region. So thank you so much, Ibu-Nella, for joining us today. And we are very excited to hear you speak about a lot of what you have planned. Over to you.
Thank you, Kavya. Good morning in US and good evening here in my region. I'm honored to be here today and share with you what we have done in Indonesia to manage our disaster risk and then reduce fiscal burden from the disasters. And when you send an invitation, I remember that all my team members who handle this initiative are women. They work with their huge passion and very detailed to make our framework and ideas work. And then sometimes I joke and I call them sometimes the disaster ladies. With this webinar, and you have the better title, I think I will call them Women in Risk Finance instead, because the disaster ladies, if people don't know, the meaning can be different. So before I come, how the challenge that we face and how the opportunities we building this the pooling fund that Kavya mentioned, I would like to explain to you how the condition of Indonesia with the disaster. Next slide, please. Indonesia is perched on the Pacific Ring of Fire and one of the most disaster-prone countries in the world, consisting of more than 17,000 islands spanning 5,100 kilometers from one end to the other. The archipelago country is home to 76 active volcanoes. Besides volcano eruption, various natural disasters such as tsunamis, flooding, and landslides are regular occurrence in Indonesia. Next slide, please. This country also widely known as the supermarket of disaster, without mentioning other type of disaster. The trend of disaster in recent years has increased from 3,000, almost 4,000 in 2019 to 5,400 in 2021. The impact of disaster, including the socio-economic damage, has also rocketed significantly. Next slide, please. An economy that is prone to disaster, Indonesia has borne a heavy financial burden in responding to and recovering from the natural disaster. The average direct economic loss from 2000 to 2017 was estimated more than 1.4 billion. In the 2018, the average annual loss to the disaster reached around $1.5 billion US. Meanwhile, the average reserve fund allocated by the government budget in the same year was only 4 trillion Indonesian rupiah, with 7 trillion rupiah of realization. That value below the damage value. There was a financing discrepancy about 70%, amounting around 19.75 trillion rupiah. The financing of disaster risk reduction at that period, that's before we create this disaster risk financing strategy, has relied solely on the state budget, Consequently, it caused potential risk which exposed to the state budget. Next slide, please. With that, Indonesia has recognized that it needed to find alternatives to finance disaster response. Therefore, in 2018, the Ministry of Finance launched the National Disaster Risk Financing and Insurance Strategy. We call it the RFI strategy, or in Indonesia, pooling fund. That's a strategy. The strategy will allow the government to seek financial solution and innovation as alternative funding to complement the state budget for disaster financing. The DRFI strategy is a combination of disaster risk funding instrument based on disaster risk layering. The blended financing instrument consists of funding from state and regional budget, as well as contingency financing as a retention instrument to finance the disasters that frequently occurs, but the impact is relatively small. And the other side, there is an insurance instrument to finance disaster that rarely occurs yet have a large impact. That kind of concept we learned from World Bank. The government has implemented state asset insurance to protect the asset of the government, both central and local. Another scheme of insurance has also been applied in parallel to protect people who are vulnerable while widely exposed to disasters such as agricultural, fishermen, and housing insurance. As part of the strategy, the government launched a pooling fund for disaster. In Indonesia, we call pooling fund bencana, so we call it PFB that mentioned by Kavya in the beginning. PFB is considered a key financial instrument to provide adequate disaster risk funding, while at the same time reducing the burden on the state budget. It is fundamentally aiming at reducing fiscal risk and shock when disaster happen. And the around 500 million US dollar initial fund was allocated from the state budget. Thus, in the short term, PFB will be complementary to the state budget to fund disaster risk management activities, while in the long term, PFB is expected to be the main retention instrument of disaster risk financing. Next, please. The funding resource of PFB, which is mandated by Presidential Regulation number 75 in year 2021, may come from the state budget, the subnational government budget, and other sources such as grant, trust funds, as well as any collaboration with third parties. The fund of PFB will then be accumulated and managed through both short and long-term investment. PFB also will be channeled to fund all types of disaster management activities, both natural and non-natural disaster, at every stage of disaster, from pre-disaster, disaster emergency, to post-disaster, including transferring risk to financial market through insurance instrument. Next slide, please. The effort of collecting funds, particularly from the subnational government, are one of the challenges we have experienced while advancing our disaster risk financing agenda. We acknowledge any lack of awareness and notion of the urgency of PFB, including how this instrument play a crucial role as one of the disaster risk financing tiers. Meanwhile, nobody knows when disasters will happen and potentially cause fiscal risk due to unplanned expenditure from shocks and limited physical capacity, both state and local government budgets. So increasing awareness and engagement of local government and other stakeholders is crucial. Therefore, the central government should take a leading and proactive role by actively promoting PFB as part of the ecosystem for disaster risk financing, which requires strong collaboration from every stakeholder, including subnational government. The measure will be valuable to increase the participation of local governments and their willingness to allocate funds in every fiscal year to be accumulated and managed by PFB. The second stage of PFB operation after collecting the fund is accumulating it, develop the fund. The regulation allows PFB to invest the fund through both short and long-term investment. This notable stage of developing fund must be monitored and evaluated regularly. So at a particular time of period, the accumulation of fund will be attained in its target calculation. Afterward, expectantly, the fund will also be adequate to complement the state budget as a financing instrument for disaster risk management, especially to support the effort on preparedness and risk reduction. The challenge also comes in the last stage of PFB operation, in which the fund disbursement will be crucial. Sudden disaster and massive impact of misfortunes require the immediate financing response and involvement of many parties in the entire period of disaster management activities. To respond to this urgency of the fund, PFB allow direct disbursement to line ministries, local government, or community group. This stage needs a huge amount of money, which also needs to be disbursed timely to the accurate beneficiaries target. Therefore, the governance of disbursements will be essential and must be equipped with detailed and specific standard of operating procedure. Despite the fundamental challenge that have been confronted prior the formulation of the DRF strategy and the establishment of PFB, the government of Indonesia also find a wider opportunity to engage more women during disaster management activities. The disbursement mechanism will provide not only protection to the riskier groups during disaster occurrence, but also a wider chance to involve them in more crucial roles within each stage, starting from pre-emergency to recovery and reconstruction. The proposal to access PFB will also be a good opportunity to increase the participation and empowerment rate of women in any activities related to disaster management. More women could be given significant roles such as facilitators, tutors, trainers, or other responsibilities, which potentially prevent and reduce the number of victims. I think we really care about the participation of women, because I think that's the benefit, because of the team, all the team actually women that handling this. I think I finish here, Kavya. Thank you.
Thank you so much, Ivanella. I think it was really great, first of all, to hear that a lot of this very inspiring work you spoke about is being led by a team of strong women, spearheaded by you. So that's actually very exciting to hear. And it was also very interesting to hear how you're including women in a lot of your DRF and DRM activities and bringing in that unique perspective and voice. So a lot of what we spoke about initially today when we opened, it's really good to see that in practice. And again, there are lots of questions coming up. So our facilitators are watching the questions, and we will collect them for our Q&A session at the end. All right, over now to our next speaker for today, Melashwane Lekomola Danziga, who is the budget controller at the Ministry of Finance in Lesotho. Melashwane has been our DRF champion in Lesotho. She has played a central role in advancing dialogue and strengthening capacity with the permanent secretary and the minister regarding the importance of developing a DRF strategy. She has truly been the driving force behind updating the regulations for the contingency fund, which is currently held at the Ministry of Finance, making it much more responsive and targeted for disaster response. And she's also helped spearhead a competitiveness and access to finance project to provide women and youth increased access to business support services and financial products targeted at MSMEs. So Melashwane, welcome, and over to you now.
Thank you, Kavya, and good afternoon, good morning, ladies and gentlemen, from wherever we are. And let me take this opportunity as well to wish you all a happy Women's Day, to everyone in this seminar. As it has been highlighted by the previous speakers, it is very critical, and we are seeing today that we need to include risk financing in our policy formulation to countries such as mine, Lesotho, which is highly exposed to shocks. Next slide, please. Which is highly exposed to shocks, and like the previous presentation, Lesotho is also has a lot of disasters such as heavy snows, heavy rains recently, and many others. So we need to be prepared to do financing for the disasters. An assessment by the World Bank indicates that without the 2015-16 drought, poverty in Lesotho would have decreased twice as fast over the last 15 years. And the Ministry of Finance in Lesotho also invited the World Bank to conduct a disaster risk financing diagnostic in 2019, which made recommendation to strengthen financial resilience. And the recommendations are highlighted here on the presentation. One was to strengthen the operational rules of the existing contingency fund, which Kavya spoke about, develop and adopt the national disaster risk financing strategy, which would help us to prepare better and strengthen mechanism targeting vulnerable groups, such as the safety nets, beneficiaries, and MSMEs. Next slide, please. The private sector, particularly MSMEs, are a critical source of job, incomes, and livelihoods in Lesotho. And that has been highlighted in the National Disaster Risk Financing Strategy, and building on from the diagnostic findings from the DRF that I spoke about previously. And when there are shocks, MSMEs are often hit the hardest and lack the financial resources to withstand the shocks. This is largely due to challenges which with access to formal finances. And we know that the MSMEs usually don't have access to finances. So when you're targeting them and you're preparing your disaster risk, I think it is much better to target those that cannot even access the finances from the commercial banks and the financial institutions. So by mobilizing grant and concessional resources to support this agenda, we have this project that Kavya spoke about, competitiveness and access to finance project, which seeks to increase access to business support services and financial products targeted at MSMEs, especially women and youth, because those are the ones mostly taking care of the families at home. So using the project to mobilize funding and establish delivery channels to vulnerable segments of the society as well is critical, because we need to attract funding into the additional funding into the contingency fund that I spoke about earlier. If support is only provided to formal enterprises, then many MSMEs are left out. I've already indicated that. Expanding the registry of informal enterprises and providing rapid support is very critical, given the role they play in the livelihoods of their people at home. So developing a risk layering approach for financing shock response is also very, very critical in this case. Next slide, please. Ministry of Finance is establishing on the left side there, we are indicating that Ministry of Finance is trying to establish a risk layering strategy, which I just spoke about in the previous slide, to finance disaster response. First, there is the contingency fund and the reserve, which the Ministry of Finance manages on a day-to-day basis. Then to provide surge liquidity to Ministry of Finance when large shocks occur, government of Lesotho is also going to purchase a sovereign insurance contract, which would help to insure such businesses, agriculture, small businesses, and the likes. So the payouts from this insurance will go straight into the contingency fund, providing Ministry of Finance with additional liquidity when such shocks occur. In addition, the government is establishing delivery mechanism to enable funds to flow to MSMEs impacted by shocks. This is through the project that I previously spoke about, which is the Competitiveness and Access to Finance project under the component 1 of that project. The project will support the development of the registry for all MSMEs, which is already there, but we think it's not so complete. So this will include the location, mobile money details, and their occupations. When shocks occur in a given location in Lesotho, the intention is that all vulnerable MSMEs in that area will automatically receive a grant payment into their mobile money account. As the financing mechanism and delivery channel are set up in advance, this will happen quicker, protecting the welfare of the MSMEs. And lastly, on the right side of the presentation, we are also indicating other activities which government will be advancing to support MSMEs, including access to savings, because we think this is very, very critical to be able to save in times of plenty, so that when there is need of or shocks, we are able to then use. We are also indicating access to credit and insurance, as I have already indicated. And all this we think will strengthen the resilience of the MSMEs in the countries. Going forward, we think we need some technical assistance to finalize draft and adopt a national disaster risk finance strategy, complete and adopt the regulations governing the contingency fund, design and execution of risk transfer product, strengthen digital financial services delivery mechanism for relief resources. Thank you very much.
Thank you, Melashwane, for that very, very interesting presentation, and for also really taking us through the different parts of how you've layered your risk, how you've spoken about it from a sovereign level, from an MSME level. So that was very interesting to hear. And again, we have more questions coming up. Now, for our fourth and final lightning talk today, I would like to invite Treasurer Rosalia from the Philippines. Treasurer Rosalia De Leon has led the Philippines DRF agenda since its inception, from strategy development all the way to implementation. She has initiated several innovations, such as the development of the Philippines Catastrophic Risk Model, the issuance of the Philippines Catastrophic Bond, which was the first in Asia, the placement of the first ever in the world parametric insurance program for national agencies and subnational governments, the National Indemnity Insurance Program for critical public assets, and she's also been instrumental in developing a government program on asset management and the establishment of the National Asset Registry System, which, as we know, is key for DRF analytics. She has also really given birth and head start to the work on national risk-based budgeting and agriculture insurance. So that is a lot a lot of DRF, which we're going to hear, and a lot of very innovative, interesting initiatives that we're going to hear about in the next 10 minutes. So welcome, Treasurer Leah, and we are so excited and honored to have you with us today.
Okay, good morning, good afternoon, and good evening to everyone. And I would like to thank the World Bank Group for inviting me to share the experience of the Philippines in risk finance, particularly on this very important day as we celebrate women all over the globe. I feel very fortunate to be one of the speakers discussing how we've worked on improving financial resilience in the Philippines. Well, first of all, working in Treasury, I must say that risk management is our business. But let me also say that managing disaster risk is the most challenging we have ever encountered. And this requires a lot of creative and innovative solution. So before getting to the how and what in our financial resilience agenda includes, it's important for us to take a look at why improving our resilience has been a key priority for the Philippines. First, the Philippines is located along the Pacific Ring of Fire, like Indonesia. So if you can have next slide. And the Typhoon Belt. Countries along the Pacific Ring of Fire are the most tectonically and volcanically active in the world. We are also located along the Typhoon Belt. Being the Typhoon Belt, we are among the countries that experience the most number of tropical cyclones and the strongest tropical among them. To illustrate, the second photo shows the path of all tropical cyclones in the Philippines over the past 100 years. Every year, we expect an average of 20 tropical cyclones hitting the country, with a number of them being quite strong. In fact, in both 2013 and 2021, we experienced some of the strongest super typhoons in the world, typhoons Haiyan and Rai. Disasters arising from natural hazards have resulted in a large fiscal impact on our economic system. A 2015 risk model for typhoons and earthquakes have modeled our annual average direct public and private sector losses to typhoons and earthquakes to be at $177 billion, or over $3.2 billion. This is nearly 1% of our gross domestic product. The large impact on disasters in my country make it imperative for us to be more proactive managers of our risk. So next slide, please. Aware of the risks and criticality of improving our financial resilience to disasters, we have identified 3 strategic policy goals for our disaster risk finance strategy. These goals are categorized into national, local, and individual levels. At the national level, we strive to maintain sound fiscal health necessary to support our rehabilitation and reconstruction needs. At the local level, our local government units have access to immediate liquidity for their post-disaster response, relief, and recovery needs. And finally, at the individual level, we reduce the impact of our most vulnerable and prevent them from falling into a cycle of poverty. The strategic policy goals help guide the crafting of our disaster risk financing strategy. The strategy makes use of a risk layering framework to optimize our use of funds and spread our risk. Our DRF strategy consists of several complementary programs such as disaster funds, contingent loans, and risk transfer instruments. The combination of these programs aim to minimize the protection gap that arises from disasters. The next one, please. The next slide, please. Aside from instruments and policy goals, we also make sure to upskill and capacitate our people. Continuous learning and development in the form of workshops, conferences, and trainings are important for us to be more aware of our disaster risks, how to mitigate and manage this, and what tools can aid us in being more proactive in our risk management. The capacity building was crucial in the development and implementation of innovative and more complex risk transfer instruments, especially those that have not yet been done in the Philippines before. We have been very fortunate to learn from our peers, such as in Mexico with Fonden, Indonesia with the Public Asset Insurance Scheme, India and Thailand under agricultural insurance schemes, and our CDRIF co-member countries on their own DRF journeys. Learning from our peers how they have designed their programs, the policies they have in place, and the challenges they have overcome have been vital in our own design and implementation of DRF programs. We're also fortunate to have the support of development partners like the World Bank and the ADB. Additionally, we have been leveraging various types of technology to enhance our risk analytics and risk assessments. This include risk models, geographical information systems like the ArcGIS and the Department of Science and Technology's GeoRisk Philippines. The next slide, please. Oh, okay, stay on this slide. The next slide. Okay. Here are some of our programs, which include our risk transfer mechanisms, the National Asset Registry System, and the Philippine Government Asset Management Policy. Our risk transfer mechanisms include innovative programs like the Catastrophe Bond and Parametric Insurance Program. The former was the first catastrophe bond to be sponsored by an Asian sovereign, the first CAT bond to be listed in the Singapore Exchange, among others. The CAT bond provided a financial cushion to the Philippines national government in the event of a triggering typhoon or earthquake event. When it was in place, you were able to receive a payout following the Typhoon Rai. The payout was then used for our post-disaster relief and recovery needs. On the other hand, our parametric insurance program covered 25 provinces along the eastern seaboard and nearby provinces. This program aimed to provide immediate liquidity following a triggering typhoon or earthquake event. The financial resilience to disasters is not just limited to implementing risk retention and risk transfer programs. It entails a broader set of risk management and interventions. Peter Drucker once said, "You cannot manage what you cannot measure." True to what Peter Drucker said, managing our risks without knowing what our assets are was difficult. Hence, we initiated the creation of a National Asset Registry System, or NARS. The NARS is the Philippine government's consolidated repository of some of its critically important assets. Since its inception last 2018, we have included data on over 350,000 assets. Among the assets included in our registry are our schools, hospitals, welfare centers, transportation facilities, and airport facilities. The NARS includes location and financial information of our assets that are key in assessing asset concentrations and potential exposure to hazards. To enhance the usefulness of our NARS data, we've bridged the information with the ArcGIS. The ArcGIS is a GIS software that aids in visualization, risk analysis, and event simulation. With this enhancement, we were able to simulate past and future typhoons, model potential losses, better understand our risk profile, and visualize areas of interest based on risk concentrations. For example, we were able to use the Department of Education's data in NARS and simulations of increasing magnitudes of typhoons to measure the potential financial impact of these events. From this, we measured our annual average losses per 1 in 100, 1 in 500 year typhoon event, among others. The analysis derived from this exercise are now being used in our development of a national indemnity insurance program, a risk-based budgeting, and to further improve each agency's NARS data. Additionally, the government has put in place the Philippine Government Asset Management Policy, or PGAM. The policy operationalizes an asset management system for the Philippine government. The policy aims to provide agencies with a better ability to manage risk and respond to adverse events. The next slide, please. While we may have been able to do a lot, it hasn't been all sunshine and roses. The road to enhancing our financial resilience to disasters was met with several difficulties. First and foremost were budgetary constraints. As I am sure a lot of my fellow members in government are well aware of securing budget for projects is difficult, especially for countries like the Philippines. To address the budgetary constraints, we have to be creative and resourceful. Thus, for the COT bond, we had requested for a special provision under the unprogrammed fund that the event that the Treasury is able to generate excess income, we can use this to finance risk transfer and risk management instruments. Thankfully, in 2018, we're able to generate the excess income and set aside the resources to fund our COT bond. We're able to apply to the Monetary Authority of Singapore for an insurance-linked securities grant to defray some of the transactions' upfront expenses. Another challenge has been the legal and regulatory frameworks, especially in more novel programs like the COT bond. I'm not sure if you're aware, but we had first thought of having a COT bond as early as 2013 to 2015. Although we had thought of it as early as then, it was only in 2018 that we were able to finally execute the instrument. This was in part also due to understanding better the legal and regulatory frameworks that would be applicable to the transaction. Despite having bond in its name, the COT bond is not a bond for the Philippines. Rather, it is an insurance-like protection mechanism. To clarify with our regulatory authorities, we held several consultation and technical meetings for them to also understand the structure of the program. Eventually, we had received clearance to proceed with the program. And finally, one of our biggest challenges is the lack of data. As mentioned earlier, in 2018, started developing the National Asset Registry System, mainly to address the lack of consolidated asset data. The National Asset Registry System now contains information on select strategically important assets of the government, useful for our design of risk transfer mechanisms and implementation of asset management programs. So the next slide, please. Learning from our experience and appreciative of the impact being proactive risk managers has, we are looking at more ways to improve our financial resilience to disasters. Some of these are improving agricultural insurance programs, enhancing private sector involvement in DRF programs, increasing affordability and access to risk finance, and risk pooled and diversified risk transfer programs. A key project we are now undertaking for improving agricultural insurance is the enhancement and improving of our Philippine Crop Insurance Corporation. In this regard, the government has conducted a review and assessments into its agricultural insurance schemes to identify key points for improvement. Additionally, we have been looking to our peers like Thailand and India for international best practices as regards agricultural insurance. So for this endeavor, we are now working on the amendment of the PCIC to maximize the utility of our subsidies, improving coverage, and implement more apt risk transfer instruments to suit the needs of our subsistence farmers. Supplementing this work, we are looking at different forms of technology, such as satellite monitoring systems and crop monitoring systems to design macro-level parametric insurance products that would be more efficient and effective for our subsistence farmers. Next, we are also looking into enhancing the involvement of the private sector in disaster risk financing, engaging our private sector to be more involved in disaster risk finance helps to minimize the burden on the national government, diversify and spread the risk, and deepen the insurance sector market. Additionally, we are also looking to make risk transfer programs more accessible to our stakeholders. Constant dialogues with local and international partners, the regulators, and development partners are being done to develop and implement more accessible risk transfer mechanisms for both public and private sector. Finally, we are looking to have more risk pooled and diversified risk transfer programs, such as our planned National Indemnity Insurance Program for strategically important assets. This program is envisioned to pool various strategic assets of the government across the nation. The pooling of assets from different locations diversifies the risk exposure of the portfolio and could ultimately lower the cost of transfer. We know that most of these programs are ambitious, and we are not blind to the fact that there will be challenges in its development and implementation. In spite of these challenges, however, we remain steadfast in our commitment to remain proactive risk managers. Thank you for your attention.
Thank you, Treasurer Leah, for that very comprehensive presentation and all those different aspects of DRF and how you're layering it and the initiatives. And I loved how you spoke about, the data piece and training. So this is really very well thought out and holistic. And I actually have a quick question for you to start out our Q&A session for today, because you've been doing this for over 10 years now. And with 10 years experience, what is your biggest lesson learned and recommendations for our countries who are starting out now? And if you were to do it differently, just starting out now, what have you learned? What secrets can you share with us that, you would change?
I think there is always the thirst for being creative and innovative, because disaster risk is something that you are venturing into a world maybe of the unknown, and fortunately we have been able to build the database that we would be needing to be able to construct a good program, understand better the risk portfolio for this the Philippines and the assets that we have. So more importantly, it's being patient. So and persevering. So what happened when we had the cut bond, in spite of all the hurdles that we have to overcome, we continue to pursue this very innovative and creative solution, because for us, it is something that would also benefit a lot of the vulnerable sectors, and most especially, of course, for the government in terms of reducing the fiscal pressures for the rehabilitation and the rebuild of these assets that would be damaged by these natural disasters, which of course the Philippines has really a significant exposure. And what would I have done differently? I think really I will be doing the reverse, being able to do again what we are now doing, and being able to do that first, being able to generate all the data that's important for our risk analysis, because as I've mentioned, we cannot be able to manage what you can measure and something that we do not have information on. So I think it's important that for us to be able to manage all this risk, we have to be able to know what are the assets, what are the good information that we would be able to use to be able to understand better and have a good knowledge of the risk that we are confronting, and with what these assets would be exposed to.
Thank you. No, I think that was some really good lessons learned over there. And I really take your point on the importance of data and setting up these strong mechanisms ahead of time. So thank you for that sage advice. Going on to you, Igbunela, I see there are lots and lots of questions on the chat, specifically on your DRF strategy and how do you use a gender lens when you do disbursement post-disaster? And also we have a question from Atsu, who's asking about, I'm particularly interested in women's participation in DRF instruments in Indonesia. And what are your thoughts specifically on how we can empower women during both the pre-disaster period or also during a disaster, so that we can increase resilience, overarchingly protect our livelihoods better as a country?
Thank you, Kafia. Yes, so I try to answer, for the women participation, I think I read the question that when the disbursement, do we differentiate that the gender? But actually, when the disaster happen, we don't. So whoever the people that need help, we will help them without seeing the gender. But for the participation, one of the mechanism from the PFB is the channeling the fund. So local community can send a proposal to BNPB, to the line ministries, and then they will get approval for their program for the pre-disaster and pasca disaster. And that program can, besides, sometimes the program can build, for the infrastructure for the prevention of the disaster, can be also for the recovery. So part of that also training, the training children when the disaster happen, what they're gonna do. They can be facilitators, then they can be a tutor. So there's a lot of part that women can play, and to build the resilience among people. One of the problem in Indonesia sometimes, when the disaster really happened, they forgot what they're doing. So it's continuous reminder, training, and discussion with people, with children, how to manage what they should do when the disaster happen. Usually led by women that can give understanding among children. And then also the discussion among community. There's also part of the that women can play a role. And then for the and then even though we don't really differentiate gender in the disbursement, but most of the channeling actually that come to women because they usually taking care of the family during the disaster. I hope that answer your question. And and then one, I think I also see the question about the involvement of the private sector. And then I said, yes, actually, since the beginning of the, we design this DRFI, actually the one of the counterpart that we asked to talk with us is Willison. That's from the private sector, from the insurance industries. And then after the DRFI strategy has been established, we also hope to involve them. And then we see that the DRFI agenda, also the opportunities for us to deepen our insurance market domestically. And then, after that PFB really fully operationalized, we also plan to build a portfolio of insurance for many risk layer of our disaster that involve many private sector insurance industries. I hope that answered the message, Kavya.
Yeah, absolutely. Thanks so much. And in fact, I was going to ask you what partners can do to support Indonesia better in implementing the DRF strategy. And you've already touched upon a lot of this private sector engagement. Anything else you would like to add there at this time?
Yeah, so for for the sources of fund, currently we rely on the national budget for the pooling fund, and then the regional government, but we also open to know for grant and local community. So usually and when they want to chip in the money in the pooling fund, they can also have a mission, okay, can you build this kind of program for pre-disaster or pasca disaster? So that's involve not only private sector, local community, and if there is a NGO that also want to have more women participation and design the program with us, is also open in our DRFI.
No, that's very interesting, and thank you so much for talking us through the mechanisms and how it works. All right, coming to you, Deputy Minister Eka from Georgia. So I think one of the first questions we had today, as soon as you made your presentation, was about the DRF strategy in Georgia. What came about building it, but also, has it changed after the pandemic? Did it lead to any changes in the framework? Or not just the pandemic, were there any other large events which have led to changes in the framework?
Thank you for the question. So actually, as I've explained in the presentation, we're kind of at early stages of having this streamlined and systematic approach to disaster risk management. We started with disclosing, and now we're in the process of having a streamlined strategy addressing it prepared. At the same time, I also mentioned that Georgia might not be the country which is very heavily affected, fortunately, with disasters, this could be one of the reasons why we did not hurry that much, I guess, in this regard. But what I want to mention regarding the COVID pandemic, that the public finance management reform itself was very robust and very sustainable, and that was very well tested during pandemic. The instruments we had in place when the pandemic hit us, the way we managed to address immediate needs and then to have more strategic approaches to address pandemic, it really showed that our public finance management system is very robust. Our electronic systems of managing budgets and treasury and procurement and so on are very robust, especially in the times when we had to allow people to work from home and we could actually not see one another for months. So having a very robust public finance management system, very flexible, but at the same time, very rule-based, in this regard really has helped us to deal with the pandemic related risks. And we really hope that this can translate in very well prepared DRF for the future.
Thank you, Minister. And thanks for that shout out to robust PFM systems. And I know we haven't really spoken about a lot during the presentation today, but that is truly one of the backbones of a strong DRF strategy. And I'm glad you brought that out, in the Q&A session. Melishwane, coming to you, finally, I know you spoke about, very comprehensive DRF strategy, and you spoke about the sovereign piece as well as the MSME piece, and really sort of being our champion for DRF in Lesotho over the last so many years. What has been personally for you the biggest challenge in developing and also trying to implement this DRF strategy and socializing it with the Minister of Finance? And did Lesotho have do any considerations while planning your DRF strategy, especially around your vulnerable populations?
Oops. Thank you, Kavya, for the question. As I indicated in my presentation, the strategy is yet to be developed. We are yet to draft it, and we actually requesting some technical assistance, perhaps from the World Bank, as we have already started the assessment with them. And with a lot of disasters and COVID coming in, we sort of got caught into the trying to address the COVID pandemic, and we put aside a lot of work that we had already started. And so we are hoping that this year we will be able to continue the good work that we had already started. That includes the strategy, the National Disaster Risk Finance Strategy, which we need to finalize and adopt, so that we are better prepared to working towards the disasters. I have also mentioned that we started the implementation of or the drafting of the regulations, the contingency fund regulations, such that we are able to better prepare for the disasters, as well as to do the premiums, payment of the premiums to the insurance that we are intending to get into. I think that there will be plenty of options, I think, in adopting the insurance, the sovereign insurance, maybe to look specifically at the agricultural sector, which gets affected by drought and heavy rains, as it is happening currently. And we need to look into that aspect as well as the private sector. We are realizing more and more that as a country, the MSMEs, as I mentioned, it's like they are forgotten, because they can't even have access to financing in the financial sector. So they need to be protected as well, because they are protecting the vulnerable people, their livelihoods. They are the main sources of income in their lives, in their families, in their villages. They provide jobs. So I think we are yet to produce these two documents and adopt them such that we start to execute the programs that we would be doing going forward. Thank you, Kavya.
Thank you so much. And that was a very, you really gave us a check on the different processes which go through while you adopt these documents and the different processes behind that. So I think that was very useful for all of us to hear. So thanks a lot for that. I think we're exactly at time now at 8:50. So as we close, a shameless shout out and plug for our two huge initiatives. The first is our disaster risk finance insurance community of practice. So if you're not already part of our community of practice, please join by scanning this QR code. If you enjoyed this event, we do have a lot of other events like that. And also we do have a very active LinkedIn group. So please do join. It's a smaller group, but we post again events, we post our new publications, we post blogs, we post a lot of knowledge exchange, information and data and disaster risk finance on the LinkedIn group. It's a closed LinkedIn group. So please do join both of these. But as we conclude today, I just again want to thank our speakers for joining us. It was so inspirational to hear from all of you. And I know, especially as speakers in Asia, it's very, very late for you. So thank you for taking the time, literally in the middle of the night, to join us and speak to our audience. We really appreciate it. And also our Minister, Deputy Minister Eka and Meleshwane, who've joined us from Europe and from Southern Africa. Thanks for being here. This is a great way to start International Women's Day, to hear from our strong female voices. So I think I can really thank the audience. I can join the audience in thanking you for your time. Also, thanks to our incredible team who helped put this together. We have a lot of people who worked in the background to get all our speakers here today and get everything ready so that we could have a seamless production of the webinar. I'd like to thank my colleagues Hang, Sumati, Tatiana, Barry for bringing us these wonderful speakers for the day, as well as Shannon from the Philippines Ministry of Finance, and most importantly, our knowledge management and communications team, Penny, who has been in the background and started the webinar, our webinar producer for today, Sonal, as well as Anusha and Elena, who've been moderating the chat as well as pulling out questions for everybody. So once again, thank you, speakers. Thank you, audience. This has been fantastic. For those in EST, thanks for joining us super early in the morning. For those in Asia, thanks for joining us super late at night. And thanks, everybody, for just making the time to spend this 90 minutes with us. And with that, I say goodbye and thank you.
Thank you. Bye.
Thank you. Thank you, Kavya. Thank you, everyone.
Thanks, bye.
Thank you, everyone. Goodbye.
Bye.